All right. So last time we were talking about support and resistance, and we pinpointed one very particular type of support and resistance. Mr. Moses, can you remind us of the type of resistance we talked about last time, the first type of resistance and support we talked about the last time? Mr. Moses.
Yes, sir. We talked about the horizontal one.
Thank you, Mr. Moses. Awesome. We talked about the horizontal support and resistance. And I'm going to be asking others some questions now also. By the way, the reason why I'm asking these questions is to establish the fact that we understand it. I don't want to assume that we understand and then later on it will be as though you do not understand, that you still be having challenges with the same topic. No, I don't want to assume. That's why I'm asking questions now. It's not just to put us on the spot. I'm not trying to put anybody on the spot. I'm trying to establish the fact that we understand this so that it will not look as though we didn't understand it and we kept on with other topics, and then later on you have too many things you didn't get and it's now becoming a problem for you. No, I don't want that for us. Okay, so this is a drawing on my screen here. All right. Who else do I have on the call tonight that was with me last week? Mr. Let's go with Mr. Michael. Mr. Michael, are you here? Mr. Michael. Okay, Mr. Michael is not here. Okay. Mr. Ifeanyi, you're welcome. You're a first timer amongst us. Please feel free. Sit back and enjoy the class. And if you have any question, please don't hesitate to ask. Mr. Gabriel, I think you've been with us for a while. Okay, Mr. Shaya, I can see you, sir. You also came late, but I want to believe it's because of the situation you have at hand, which you told me already. So I won't say anything on that, but you're welcome, sir. So, Mr. Shaya, help us out. What's okay? I'm coming. Give me 1 second. This is a practical class, so that's why it's going this route. I don't want to take it like a theory class where we just keep talking without practicalizing. It's not going to be beneficial to us. Okay, Mr. Shaye, I want you to help us with this diagram we have on our screen. What happened around this region, and then what later happened around this region? I want you to analyze this for us, Mr. Shaye. Go ahead, sir.
All right, thank you so much. Good evening, and thank you so much for the class for today again. Yes,
You're
the
welcome.
first region that you actually put in the red corner, that
Yes, please.
actually stands as a resistance
Okay.
because the candle was not able to go through. It prevented the candle from going through. But over time, the candle finally broke it and went through. And so that line, that same line that was a resistance initially, is now a support for that same candle because so that it's going to be easier for it to move up to the next level. So it
Thank you.
was a resistance before, but now is a support because it
And
has broken.
now do we establish the fact that it is now a support? Is it just because it broke through that it is now a support, or something happened that made it become a support?
Yeah, thank you so much. What happened now is that the candle came back and tried it again and eventually discovered that it is now supporting it after because the candle came back and touched it and it didn't go down. So since it didn't go down, it's now a support to make it moving, keep moving ahead. I hope I've been able to try explain it in my
Thank you.
way.
Absolutely correct, Mr. Shere. Thank you very much. It is called a retest. You can see the blue box right there. That place where you have the blue box over here, the blue box that I used to capture this region. I put it there on purpose for us to see the retest. It is called retest, Mr. Shere. The price after having broken from this region came up and then came back to retest that area. But this time around, it couldn't break down to where it came from. However, it bounced back from that very resistance that was previously resistance. Once it touched it, once it retested it, it went back up, and then that confirms that it is a retest, because it is possible, Mr. Shea, that there is a breakout, and after the breakout, the price comes back down. Let me give us an example of that. Let me take this off. Look at this. We could have something like this, okay? We could have something like this. After the breakout, the price coming back into the zone. It is very, very, very possible. And that is what we call a fake out. It means it wasn't really a breakout after all. It just went up to grab liquidity. And after grabbing liquidity, it came back into the resistance area. It broke down into the resistance area again, and then it's still under the resistance. But for the example that I gave, it became a support because there was a retest. And then when it retested that zone, the price bounced back up, okay? And that's why it is a retest. Thank you very much, Mr. Shea. So try to remember the keyword. It's a retest for further analysis. Okay, Madam, remind me of your name, please. Madam Modupe, all of these questions I'm asking is both because of you and because of others. I'm using one stone to kill two birds. Yes, as I'm asking them to help them remember everything we did last time, I'm also helping you to get insight from them that their network was good the last time, because your own network wasn't good like that last time. So if you understand clearly what Mr. Moses and Mr. Shea just explained, what they just explained is that from here, the price touched this red zone previously and couldn't break it. And because it couldn't break it, it was called a resistance. This red line was resisting the price. But over time, the price was able to break through, okay? And coming back to retest that zone, it couldn't break down anymore. However, the price from there went up. So it is now, this previous resistance now turned a support. And let me see, who else do I have in the chat? Okay, I don't have, I think, okay, Mr. Moses, back to you, since you were in the class last time. So what the situation that transpired from this red zone to this blue zone, what do we call it?
Basically, the market was ranging.
Yes, okay, it was ranging. Thank you. A sideways market or a ranging market, correct. But there is a particular name we called this occurrence in the last slide, in the last session.
Support flip.
Thank you, Madam Modupe. That is a what? A support resistance flip. So it simply means that the resistance flipped and became what? A support. Thank you, Mr. Moses. That is the keyword. It became a what? A resistance support flip. Okay, it was previously a resistance, but flipped into what? A support. The same way we have this drawing looking up now. We can also have this drawing looking down. Let's have another example. Is everybody understanding this, Madam Odupe, especially you? Are you understanding this?
Yes, very well, sir.
Okay,
Very
okay,
well, sir.
okay. Thank you. Because you might be our coach next week, so I need you to understand it very well. All right, let's take this off and this. Please let's mute our mics, please. Who is that, please? Let's mute our mics so that we don't disturb. All right. Who do I call now? Okay. From the people who were in the last class, Mr. Shayet, I think you are the next now. We don't have so many people from the last session. All right, Mr. Shayet, can you please analyze this market for us? What's going on here, Mr. Shayet?
Okay, thank you. Just like what happened the other time, this time around, the candle at the top, the candle at the bottom actually has been standing as a support.
The candle at the bottom?
Okay, please, sorry. The candle at the bottom has been standing.
You mean the zone at the bottom?
Yeah, the zone at the bottom. All right, the zone at the bottom is actually standing as a resistance.
Okay, hold on, Mr. Shea. What you mean is this, right? This one right here. If I'm correct. Okay.
Yeah.
It's standing as a resistance. Okay. Because why is it standing as a resistance?
Well, definitely. Actually, I really put it now. The candle of course, the candle is coming down, and since it's coming down, the line the line at the bottom stands as a resistance from the candles coming down. I don't know the way I should really place it.
I understand. I perfectly understand why there's a little bit of why it's a little bit tricky, because you can see that the trend is downtrend. That's why you're now calling this region, you're not calling it the resistance, and you think this region is the support now, right?
Yes.
Okay, I think we don't look at it that way, even when the market is in a downtrend.
Okay, so let me just take it the right way then. That means
Yes,
that the line at the bottom is a support.
Yes.
All right. Support. At the end of the whole day, the candle broke through the support and went down. Now, after going down now, it now tried to, it did a retest. After doing a retest, that line now becomes a resistance.
Why did it become a resistance? It didn't just become a resistance. It retested, yes, but what happened when it retested?
It retested it and it continued going down or coming down.
He retested it and couldn't break it. It's very important. And couldn't break it. Because the retest could happen several times. Let me give you an instance, sir. If you look at this, we could have something like this. We could have something like this. Let me get my tool again. We could have a choppy market like this, whereby the market just keeps trying to break and won't be able to break. Before eventually it will now be able to it will now come down. So there is something happening here. It's not just that the market is just playing and just trying to be in this region for a long time. No, the market is trying to break this flip support, this support that has not turned to a resistance. The price is trying to break and come up and come up like this. This is what the price is trying to do. Yes. But the price couldn't do it. Okay, so it is very important that we input the keyword, which is what the price retested and couldn't break, and so therefore continued downward. So that's the keyword, Mr. Shaya. It's very, very important. Let me show us from live chat what I just explained now. Okay, let's look at what we have here. We can see that the market came all the way from this region here, all the way from this region. The market stepped down like this and came back up, trying to break through this place. Couldn't, but there was something that happened. All this long week right here. We know that battle happened here. Okay, for we to have a long upper week, what does it mean? Mr. Moses, what does it mean for us to have long upper weeks like this? Remind us.
The long upper week, that means that it is basically the war between the buyers and sellers. That means that, you know, the buyers tried to push the price up, but the sellers fought them and dragged the prices all the way down.
Thank you, Mr. Moses. Absolutely correct. There was a war at intervals in between each long week you can see here is a battleground. Okay, these buyers tried pushing the price up, but the sellers wouldn't agree. And each time the buyers pushed the price above this red line, the sellers quickly pushed the price down. Okay. And that way, there was a liquidity sweep there. There was a liquidity sweep. The price kept grabbing liquidity here, grabbing liquidity here. Okay, it happened the first time, the second time, the third time, the fourth time. all the way until the market saw that, okay, I think the sellers are very serious. They won't allow us go up. Each time we took the price up, they quickly brought it down under this red line. Okay, I think this is what do I call it now? This is the boundary. They won't allow us pass. You know what? We are giving up. And that was when we saw that the price came down. Okay. So after the price came down, we can see that the price tested this support right here. Okay. Although the price pushed the candle came out a bit, but it wasn't sustainable. We saw that it soon came back in and then came back up here to retest this area. Although it didn't touch it, but it was close. Okay. Afterwards, we saw another retest here coming. We saw the price coming to this support again. Okay, testing the support again, and we can see how how we couldn't break the support again, and then the price came back up again, and then before the price finally did what? Broke here. Can we see that? Before it finally broke this region. I don't know if we're understanding what I'm saying. Are we getting it? Are we getting it?
Yes, please.
Okay, so we see that there's been multiple touch of the supports, okay, and it's been a ranging market before eventually the price broke out from here, and when it broke out, we saw that it didn't just break out and just left. He came back, okay, to do what? To retest that support, and the support did not stand. Just like where we're coming from, the example I'm giving us. Mr. Shaye, can you see that the support did not hold over here?
Yes.
So you see that it is very important that we use the keyword. It didn't break or it broke. Right now, after breaking here, it came down. The first time it was going to retest, it broke back up. So this support did not hold. And then the price found its way, did what? Up. Again, it came down, broke this support again. What is simply telling you is that this boundary, the support boundary, this support line is no longer strong. It was strong in the past. Okay, if we look at here, if we look at this region here, we will see that the support initially was strong, but because the armies became so weak, as time went by, they fought, they are now tired. They couldn't hold this line anymore. And then the line became what the enemies now enter and go out and enter and go out anyhow. Now let's look at it again. Look at here. It held here. This place, it broke out, but they soon pushed them back in. Okay, look at that. The next one, this region, we can see that it didn't even get to the support before the price went back up. Okay, if you look at this place right here, the price also came out a little bit, but you can see that there is a long lower wick there. It simply means buyers did what? Push the price up. Okay, and from there we saw a trace up again, and afterwards the price came back to test again. However, they are tired this time already. The soldiers have fought, and the enemies won't just give up. They just kept on retesting. They just kept on trying to break the wall, the support wall, until they eventually got the soldiers weak. And when the soldiers became weak, they gave up. And now the price at this region broke the support, came out, broke the support again, because the support is now weak. The soldiers have given up. And then after breaking the support, we can see it's going all the way up. So unlike the example we gave up right here, Mr. Shaye, so when the support flips to become, when it flips and becomes what? A resistance, it can either hold or not hold. In the case of this example that we have right here, the support turned resistance, it held firmly. The price couldn't break it up. Okay, but in the case of the example I showed us back here, the support held at first, but eventually it became weak. It's just like when you have a wall before you, and there's no way for you to pass through the wall. if you are a boxer, if you start boxing that wall, the wall might not fall immediately. But if you don't give up, eventually the wall is going to have a crack and eventually break. Maybe not break that entirely. Maybe the top part where you've been boxing will become weak and break. And from there you find your way. You can then start going back and forth. Not until the whole wall is brought down, like brought low down. That's not until when you can pass. Once the upper part that you've been boxing now becomes weak and breaks off, and the wall is not at an half level, I can tell you, you can skip that wall back and forth. Am I correct, Mr. Shea? Am I still being heard? Am I still being heard?
Yes, sir.
Okay, Mr. Shea, I was trying to ask you that. Do you understand what I just explained?
Yes, I do. I don't know what happened to my screen, but I do.
Okay, awesome. If you do understand, great. Madam Ojukwe, how about you? Do you understand very well?
Yes, I do.
Okay, awesome. So let's not make mistake that because the market is now in a downtrend, we will now call support resistance and resistance support. No, ideally the market is always meant to go up, but because of bearish the downturn, we don't now call support resistance only until the price breaks the support. Before we'll now call it what? A resistance. Originally, from here, it wasn't a resistance, it was still a support, even though the market was in a what? A downturn. Until the price broke the support, and then we now have the support that was previously support now becoming what? A resistance. Until then, we cannot call what? A support a resistance. I believe we'll understand this. If you understand this before we move on, please give me a thumbs up so that I can understand that we are all on the same page. Mr. Moses, I don't know what happened. You were in the class before, but you left. Now you should be here. Okay, awesome. For everyone in the class, we all understand except for Gabriel Animba. And okay, I think it's only Gabriel Animba that does not understand. And I think you are new in our midst. Please, I will encourage you to visit our YouTube page. Go and take time and watch the videos we've done in time past and try to understand them so that you can come up to speed with every other person where we are right now. Please visit it so that you don't build your skyscraper on a faulty foundation. When you visit the videos, it was properly broken down. You will understand them, and then you'll be able to catch up with us where we are. All right, so let's take it a step further today. Does anyone have questions before we move on? Does anyone have questions before we move on?
Yes, I have a question, Coach.
Please go ahead, sir.
Yeah, so you have said, you have mentioned severally, like about, the breakout, Now there is what I read also on one of the charts called the break of structure. Is it the same breakout, or is break of structure is different from the breakout that you are talking about?
Okay, I love the fact that you are taking personal studies yourself. Break of structure is a little bit different. We are coming there very soon when we start to talk about the smart money concept. It is break of structure is peculiar to smart money concept. We are coming there. Even me myself, I'm trying as much as possible not to start using the terminologies. I use smart money concepts, and there are some peculiar terms that are peculiar to smart money concept. I'm trying as much as possible not to start using them. I'm just trying as much as possible to simplify them right now, use the common language right now. When we get into smart money concept, I'll start to use all those terminologies. So let's hold on for now. So when we get there, we'll understand more better the peculiar to smart money concept. Okay, let's move on. So what's Madam Ojukwe, Madam Ojukwe, what is the name of this type of support resistance again?
This will be support resistance flip.
No, I'm not talking about the flip now. I'm talking about this type of support in its entirety and this type of resistance. What type of support and resistance do we call them?
Horizontal.
Thank you. Horizontal support and resistance. Yeah. Now, because we are moving on to the next one, that's why I wanted to establish the fact that you understood it already. Okay, now the next one we have on our list is trend line. So we are starting trend line now. Okay, let me zoom in. Can we see my screen still?
Yes, please.
All right, so trend line. A trend line is a diagonal line connecting consecutive swing highs downtrend or swing lows uptrend on a price chart, acting as what? Dynamic support or resistance. They help traders visualize the dominant market direction, anticipate price bounces, and spot potential trend reversal or breakout. Before I narrow down on this, let me quickly tell us something that, for instance, if you have a ranging market here, if you are buying up, this right here, 1 second, I think my network is acting up. Okay, so let's say, for instance, we're having a ranging market. When we are to buy, we don't buy from here if we want to buy up. I forgot to mention that we don't buy from here. Neither, that's too big. Okay, we don't buy from where? From here. Like I told us, when we are trying to buy up, we wait for the market to come down to the support level, and then we buy up so that we go along with the trend. And we are trying to sell. We don't buy from where? From the bottom. We wait for the price to come back to the resistance, and then we sell down. Do we understand? Let me repeat myself. When we are trying to buy up, when we are trying to long the market, we don't long from this circled region. We wait for the what? The price to come to this region, and then we do what? We ride on with the wave, and then we buy up. And when we are trying to sell, we don't sell from this region. Okay, we wait for the price to come back to the resistance, and then we sell. Do we understand? Do we understand? So now in a ranging market, if we want to quickly take maybe 1 or 2% or 3%, and if it is a spot market, like we know, spot is just one way. Futures is two ways. Spot, you can only buy up. Futures, you can either buy up or down. You can either buy or sell. So now let's take, for instance, if it were to be a spot market, we're going to use both examples. If it were to be a spot market, I'm coming. Mr. Moses, if it were to be a spot market and we are buying up, where do we enter the market from? Do we enter from number 1 or do we enter from number 2? Mr. Moses, do I still have to? Okay.
Hello?
Mr. Moses,
Yeah,
I was saying, if we are to buy up, either in a spot market or in a futures market, we want to long the market. Where do we enter from? This is our chart right now. Do we enter from number 1 or we enter from number 2?
For the spot one, we enter from number 1.
Okay, good. It could be for the spot or for the futures, because we can long the market in both the spot market and we can also long the market in the futures market. So, however, your answer is correct. We enter from number 1. Why can't you enter from number 2, Mr. Moses?
The reason we can't enter from number 2 is that, from number 2, we have to sell because the market is coming down. Yes. Because
the market is coming down. Thank you. So, if we were trying to long the market and we bought at number 2, we will be shooting ourselves in the leg, because we know any market that is already at the top is meant to come down, and any market that is already down, according to analysis, is meant to go up. Not all markets that are down will go up. That's why I said according to analysis. When we analyze the market and we see that, okay, there is a potential to go back up, that is when we buy. We don't just buy because the market is down. And also, not every market that is at the resistance level, not every one of them is sure to come down. That's why we analyze the market before we step in. Okay, when we see the parameters set properly, when we see the setup clear before our eyes, and we know that of a shorty, this market is going down, that is when we sell the market. Okay, I think Mr. Moses has answered both questions. Okay, now let's go back to what we have here, trend line. A trend line is a diagonal line connecting consecutive swing highs and swing lows. Okay, swing lows. Now let's look at that first of all before I go to the other parts of the what's it called now, definition. Okay, if you look at the next thing we have here, in this definition we have swing highs in a downtrend and then swing lows in an uptrend. Those keywords are important. Now if you look at the example that I have here, we have two trends here. Madam Modupe, how many types of trend do we have in the crypto markets, in the digital markets? How many types of trends do we have?
We have 3 trends.
Thank you, ma. Can you name them?
Uptrend, downtrend, and the ranging trend.
The ranging market. Thank you. Thank you. Awesome. All right. So we right here, the example we have, it's a what? It's an uptrend. Okay, and we can see that the market started from this zone right here. Okay, went up and came down. Now this down right here, it respected the trend line. This is an uptrend, right? And when we are trying to draw a trend line, when it's an uptrend, we draw it under the swing lows. That was the key point that I was trying to pinpoint for us the other time. So it says a trend line is a diagonal line connecting consecutive swing highs in downtrend or swing lows in uptrend on a price chart. Now, let me show us that swing low on the uptrend. Now, this is the swing low in an uptrend. Look at this. Right here is a swing low. Right here is a swing low. Right here is a swing low. Okay, the price quickly swung down before continuing up. So this is a swing low. This is a swing low. Okay, are we getting it? And then for a downtrend, we can see a swing high, like the definition puts that for a downtrend, we see swing highs. Now look at this. The price started from this region here. The price started from this region here, came down. Like we all know that the price doesn't just fall straight like this, vertical straight like this. No, it doesn't happen. When you see something like this, you should run for that project. It means something is wrong with that project. Well, as a matter of fact, when you see something like this, it simply means they've rocked full. Okay, you see it all the way from the supply, go straight down to the demand, or to the what's it called, the support level. Then something is wrong. If something is wrong, the market always should be like this. Okay, for a downtrend, not just a vertical straight down. That is a red flag. Okay, does anyone have questions before I move on? Okay, let me move on. So we can see the price started from this region, came down, then went back to respect the trend line. Okay, and that's a swing high right there. Then came down again, went back to touch the what's it called again, the trend line again, and then respected the trend line again. He didn't break it and came down again, and then this right here is another the last swing high. Okay, how many swing highs do we have there? We have 4. We have 4. Okay, so that's for a downtrend. That's for a downtrend. Now, one thing that I want us to observe is there's a different way of drawing the trend lines. For uptrend, the trend is usually serving as a support. As a support. You can see the market going up. It came back. The trend line supported it. It didn't break. It went back up. It came back again. The trend line supported it. It didn't break. Went up again. Came to respect the trend line again. It didn't break. Do we understand that? And for what's it called now? For a downtrend, the trend line always serves as resistance. It is not supporting it now because the price is going down. Okay, it simply means the price started from here, going down, tried to break to go back up, but this trend line will not allow it. So it has no option than to respect the trend line. Went down again, coming back here, testing this trend line again. because the trend line is strong, okay, it couldn't break, it still went back down. If the trend line were not to be strong, it would have broken and then it would have found its way back up. Okay, so the trend line, when in a downtrend, serves as a what? A resistance. Why? When in an uptrend, it serves as what? A support. Each time, you can see for the uptrend, each time the price came here, it bounced back up, even higher than where it was coming from before. Okay, it came down, it bounced back up again. Can we see that? And for the downtrend, we see that the market was, the price was coming down. It touched the trend line, it went further down. It means it was resisted, and then the price went further down. It came back to the trend line again, looking for a breakout, couldn't get a breakout. The price went further down. Okay, now let's look at some other important keynotes in this example. So we have some terminologies right here that belongs to what's it called? Smart money concepts, like connecting what? The higher lows. I will not touch on that now. When we get to smart money concepts, I would elaborate on that. Okay, and we also have another one right here connecting what? Lower highs. Higher lows and lower highs. We'll come back to those ones later on. But do we understand the concept of the trend line now? Before I go to the live chart to show us more about the trend line, do we understand? Do we understand? Okay, Mr. Sheye understands. Madam Mudupe understands. How about Mr. Moses? Great. Do we have Mr. We don't still have Mr. What's it called now? Michael. We don't have him. Okay, that's not so good. Mr. Remix, you are welcome, sir. Good to have you. Okay, so let's move on. Gabriel, Mr. Gabriel, I see your hand. I believe you're getting it too. Awesome. Now let's look at a live example. Let me take this off. Okay, if I draw the trend line too long, it might the swing what's it called now? The swing eyes, they might not touch the trend line. So that's why I didn't take it too long. But if I'm to look at this trend right here, the entirety of the trend, the downtrend, the uptrend stopped here. Okay. And then there was a decline from there. And if I'm to draw the trend line, I'm supposed to draw it from here. But however, it might not respect, if I do that, it might not respect the swing eyes. That's why I took a short one. Let me look at what it's going to look like if I draw it like this. Okay, that's it. You can see it only respected two swing eyes. One over here, and then one over here. Okay, but we can all see that what this is a downtrend. But if we want to make it to respect the swing eyes, what we need to do is to take it bit by bit. Now, if I take this off, you can see that it respected at least three swing eyes here. One over here, one over here, and one over here. Now, let's use this one as an example. We can see that while the market was going down, okay, there was a stop over here around this region. Okay, we saw a little bit of back and forth, like the market trying to to consolidate. And over here, when it got to the trend line, the candle started as a bullish candle, but sellers didn't agree because they were the one dominating the market. And what did they do here? Mr. Moses, what did they do to these two candles you can see here? The two candles with a long upper wick. What did they do to it?
They took the price down.
Exactly. We can see the very long upper wick. What it simply means that what it simply means is that the sellers, they took over this long candle, this candle that started as a green candle, because for it to have a wick getting to this region, it simply means the candle had a body all the way to this side before the sellers took over and took the price down. For this green candle, they couldn't take the entire green armies out entirely. They couldn't take them out fully, so they stopped here. But for this red one, it simply means the green body started from here, came up. However, sellers stepped in and pushed the price back down, even below the opening price. Okay, so the higher what's it called now? Sorry, 1 second. The swing eyes, okay, the swing eyes, you can see it's respected the trend line. Okay, it respected the trend line. Now let's go to a lower time frame and let's look at this more. Now we've looked at what's it called? We've looked at what's it called, downtrend. Let's look at an uptrend now. Okay. Okay, let me take it from here. Okay. Okay, can we see the trend line? Okay, if we look at this uptrend right here, one thing that I need to let us know is that our trend line oftentimes will not be perfect. What do I mean by that? Look at what we have here now. You can see there are some candles here that is not respecting the trend line. Yes, of a truth, it happens like that. When we have such things as this, let's not worry, let's not be bugged, let's not be troubled, okay? Because sometimes there is usually fake out. Okay, there will be fake out. What is fake out? A fake out is when a candle breaks the trend line, acting as though it is going contrary before it quickly returns back to the original trend. Okay, now, so don't worry about it. But all in all, you can see we have about 4 or 3 swing lows. When we have more than 2 or 3 swing lows already, it is already confirmed that it is indeed an authentic trend. It is indeed an authentic trend. Does anyone have a question? Okay, now let's consider.
Sorry, a quick one, sir. Please, I want to ask, when capturing as in the swing highs or swing low, must you always consider the wicks?
No. It is the body of the candle that you consider. You don't consider the wick.
All right. Okay, sir.
Yes. And a very good place to take your trend from is somewhere like this, right here, where you have equal what's it called now? Opening and closing. Okay, opening and closing. You can see the green candle over here closed right at the same place where the red candle opened. Okay, for those who were in the class where we did when we talked about candle, we talked about we discussed that the green candle, they opened from where? Let me quickly refresh our minds. Let's say this is a green candle right here. And let's say and let's say this is a red candle right here. Mr. Shaye, can you please help us analyze these candles for us?
Okay, for the green candle, it opens at the bottom, from the bottom, and it closes at the top. Then, of course, there's also a wick in it. Like, okay, fine. Let me try this first one, this green one. It opened where the green color started from at the bottom, but it went down and later went back up because it's green. So since it's green, it opens at the bottom. So it now went back up. Then when it got to the tip at the top, all right, it now came down and closed at where the green body finished. That's where it closed. I don't know if I have been able to explain that.
Go ahead, sir. You're spot on.
Okay, so that's for the green one. Then the red colored one, actually, that is which represents sell. It actually opens at the top. It opens at the top. All right. Now we notice there's a wick in it. So when it opened at the top, all right, it opened where that red started at the top, where it started, that's where it opened. It now went up. After going up, all right, as it now finally came down. While it came down, it created a wick. There's a name that is supposed to be called, don't mind me. So after creating that wick, it now went down, and now finally went to where the wick ended at the bottom. Then when it got there, it now went up back a bit, and it closed where at that bottom, at the bottom plus, that's where it closed. But of course, the wicks are signs that it went there, but eventually, it left and came back to where it ended. That's the red place, that's the body.
Thank you very much, Mr. Shaye. Can we all give him a virtual clap, please? It's not easy. Mr. Shaye is a grown-up man and he's a family man. He has a lot of responsibilities than to remember the details about candles. However, he has done justice. Please, let's give him a virtual clap. I mean it, please. Let's give him a virtual clap. He was spot on. He was spot on. All right, so let me amplify what Mr. Shaye just said. In essence, what Mr. Shaye is saying is that it is possible for us to have, one second. What Mr. Shaye is saying in essence is that it is possible for us to have a candle without wick. Coming. Okay, then this. So what Mr. Shaye is saying right here is that it is possible for us to have a green body candle without wicks. Now, in scenarios where we have green body without wicks, what is a wick? The wick is the tail part of the candle. Right here, this part of the green candle, where you can see a small line, is called a wick, okay? And this part of the red candle, where you can see a small line, is called a wick. The same here, it's called a wick, okay? These are upper wick. This one up here and up here, they are called what? Upper wick. While this one right here and this one right here, they are called what? The lower what? Wick. Now, in essence, Mr. Shaye is letting us know that it is possible for us to have what? A candle without what? Wicks, either for green or for red. As you can see right here, we have a what? A red candle right here without wick. Now, when and why and how is it possible for us to have a candle without wick? Now, he said, Mr. Shaye told us that the green candle starts by opening from the bottom. Let me show us. This is the bottom right here. Right here is the bottom, okay? This is where this candle opened from. That is the opening of that candle. And the candle was closed right here. The candle closed right here. Okay, so for green candles, it always opens at the bottom right here. And it always closes right here. And for the red candle, it always does what? It always opens. I'm coming. And for the red candle, it always opens at the top. And it always closes at the what? Bottom. Okay? Red candle always opens at the top and closes at the bottom. Why for green candle? Green candle always what? Opens at the bottom and closes at the top. Okay, now let's put that in mind for those who are just joining us. Now, when we see a candle that is strong like this and bullish, and it doesn't have what? A wick, it simply means this candle opened here. Sellers couldn't push it a little bit down. The candle opened there and went all the way up. Just like sellers couldn't push it a little bit down, they couldn't also push it a little bit down when it got up. And then it closed strong. It opened strong, it closed strong. It's like a 50-man battalion coming out here, standing their ground with their ammunition, and it should be in case they even see a fly, they are going to shoot it down. And nobody could even come near. And they stood their ground, and they waited in this region until their mission was complete, and then they disappeared. It simply means not even one enemy came close. So they opened strong. The enemy couldn't even push them back, and they finished strong their mission, and the enemy couldn't even push them an inch down. That is what a green candle without wick. That is what it means. Okay. Now, for when we see a green candle with lower wick and upper wick, what it simply means is that, let me take this off. What that simply means is that the candle opened at this region right here. Okay, it opened here. However, sellers quickly stepped in, pushed the price down, okay, to this region. However, buyers did not agree. Don't forget that the opening price is still here. Okay, don't forget that the opening price is still here. Okay, now sellers pushed the price down to this region, but buyers quickly stepped in and wouldn't allow them push further. And buyers took the price back to the open region, to the opening region around here, and then pushed the price up all the way to this region right here. Okay, all the way to this region right here, this region. They pushed the price here, but sellers stepped in again, wouldn't allow them push it further. Sellers then pushed this price back down a little bit to this place. And then when the hour of the candle was done, the candle closed like this. And that is why you can see the long wick. What wick simply means is that wicks are areas or regions where the battle extended to, but didn't last long there. Do we understand what I'm saying? Wicks are regions or areas where the red and the green armies fought their battle, but that they didn't last there. They didn't stay for too long there. Okay, if they stayed too long, then you would have seen it with a green color, a green bodied candle color, or you would have seen it with a red bodied color. But when you see a wick without a body, now by the way, this very thick green you can see here is what we call the body of a candle. Okay, is what we call the body of a candle. So if you can see the body of a candle, then it means the battle happened there. Then the color you can see actually won. If you can see the green color in the body, then it means it is the green army that won the battle. If you can see the red color in the body of a candle, then it means it is the red army that won the battle. I hope we are understanding. It means it is the red army that won the battle. Now, but for this one now, the battle got to this region, okay, but didn't last. The green guys pushed the price from down here at the opening. They pushed the price to this level, but seller stepped in and pushed the price down to this level, and so the candle closed like this. And for the red candle, we said the red candle starts by opening from where? From the top right here. Okay, so the candle opened from this place. The candle opened from this place. However, the green guys stepped in and they pushed the price up like this. But the red guys it didn't take them long before they stepped in also and said, no, this time it's not your time. We aren't going to agree. And they did what? They pushed the price from where the green guys pushed it to, and they pushed it all the way down. They pushed it all the way down to where you can see the long wick. But the green guys also said, no, we are not lazy people too. We'll fight a bit. And they fought a bit, and they were able to push the price from here where you can see the wick. They pushed the price back here, and the candle closed like this. Okay, that is what Mr. Shaye was explaining in essence. Now let's get back to what analysis. So I was saying before I took a detour, I was saying that when we are drawing our support and resistance, the critical place we want to consider, okay, is the closing and the opening, the closing of a green candle and the opening of a red candle that are on the same level. Madam Modupe, this, I think you asked the question, right? You can see that these two candles now, if I want to draw my horizontal resistance, this is where I'm going to put it. Look at that. No, that's far away. Let me take it again. This is where I'm going to put it. Can you see that? Right by the head of the candle, by the close of the green candle and by the opening of the red candle at the same level, not the one that is not equal. If you look at this one right here too, you will see that we have a equal same level, close of a green candle and opening of a red candle. Can you see that? Those are the places you want to consider. But that's for horizontal, what's it called now? For horizontal support and resistance. But for trend lines, you just want to consider the start of a trend and the end of a trend, not basically like horizontal support and resistance, where you need to look for the same equal, like you need to look for same range of opening and close of the previous candles. Okay, not that, but for trend line, you just want to watch out for this beginning of a trend and the end of a trend. Now you can see right here that this market came all the way from here, okay, look at that. And then when it got down here, you can see that something happened here at this region. And what happened was that the trend line, you know, this was a downtrend. You can see our swing eyes. This is one swing eye here. Okay, this is another swing eye here, even though it didn't touch the trend line. It happens like that sometimes. You can see another swing eye here. Okay, and right here where we are supposed to have the next swing eye, Madam Modupe, something happened. Did we have swing eye right here? Madam Modupe?
I'm with you, sir. I'm looking, I can't tell, sir.
Okay, we didn't have a swing eye here because right here, the price stopped respecting the trend line. You can see that there's a breakout from here.
Okay, yes.
There's a breakout from here. So right here, instead of having swing eye, we had a breakout. Okay, the market stopped respecting the downtrend. It means once you can see something like this, a breakout, and after that breakout, you can now see another strong bullish candle follow suit. It means we are done with that previous trend. Look at this. This is a very strong bullish candle. Even the one that we had for the breakout, look at it. It's a very strong bullish candle. Look at it. So when we break out like this and we follow with a strong bullish candle, just know that we are done with the previous trend that we had, which was a downtrend. Okay. Now, sometimes a strong bullish candle might not follow the breakout. Sometimes we can have a breakout like this one, okay? And then the next thing you will see, Madam Modupe, is, and to everybody also, after the breakout, the next thing you will see is a retest of the trend line, okay? A retest like this, and then before you see a strong momentum candle. Do you understand it, Madam Modupe?
Yes, sir.
Mr. Moses, do you understand it? Mr. Sheye, do you understand it? Mr. Remix, do you understand it? Please give me a thumbs up if you do. Thank you, Mr. Sheye. Thank you, Madam Modupe. Yes, Mr. Remix, thank you. Okay, I'll be coming with my question very soon, so please make sure you are understanding it and you're not just giving me a thumbs up, okay? I really need us to understand it. So what I'm saying in essence is it's not one way. We can have, after a breakout, we can have something like this, straight up, which will confirm that we're already in an uptrend, okay? But that doesn't mean we should not wait for confirmation. We will come to the area of confirmation later. And sometimes we might not have it like this one right here. sometimes after this candle broke out, after this breakout right here, we might have a retest, and the retest is what I just drew right here. Okay, it will come back to test the trend line before it goes back up. Okay, now that's that on that. Now, if you look at it, when we're done with this downtrend that we had, this downtrend, when we're done with it, look at it. This, let me even measure my because after the breakout, look at that. After the breakout, we had a retest. Okay, now this region is what the price came to. I'm coming. Now, if you look at it, after we had the breakout, you can also see a change of character here. Although we are still going to come to that. I don't want to start using this terminology yet. You can see a change of character here, confirming that what we have a change of a trend. A simple change of character simply means the trend has changed from the previous trend to a new trend, from a downtrend to an uptrend. Now, after having seen that change of character, it is sometimes we wait for a retest before we take our signal, and sometimes we don't wait for retest. It's depending. Okay. Now, for the person who didn't wait for a retest, and after this candle closed, bought up, do you know that the person will become frightened after buying up, and he sees that the market is coming down, especially when it is futures, and he sees that the market is coming down first? The person will be frightened, but because of proper wallet management, and maybe perhaps the person is a sophisticated trader who knows what is going on and is not frightened, he knows that eventually he has not bought wrong, he has bought in the right direction. The market is just doing its thing first, and eventually he knows that the market is still going to come to his prediction. Look at the market came down first from where he stepped in at the close of the green candle. The market came down first, but after the market was done coming down towards this region, we can see it came back up and it delivered 8%. That's for the person, the trader who didn't wait for a retest. Okay, it is important we wait for a retest. That way we will maximize our gains, our profit. Now, the person who stepped in from the close of this green candle here, this bullish green candle here, who took 8%, and the person who waited for retest, they will not see the same percentage. You look at the difference, 8 to 15. I think that's about ×2. All right. So it is important we wait for retest. Now, for the person who waited for retest, he would have been able to capture more take profit. Now, look at that. This was the last lower high. I'm beginning to use some terminologies of what's it called now? Smart money concept. Okay. Yes. This was the last lower high of the downtrend that we were having. Okay. Now, after this last lower high, we could see that the market from this lower low, this is the lowest low. Okay. The market shot up. Okay. Now, for people who have always followed my signal, you would always see that I usually use blue line like this. This blue line right here. I'm sure you'll be familiar with it now. It's because I'm using it to map out the change of character. Because sometimes change of character doesn't appear immediately. But because I know how to go about the analysis, I already know that there's already a change of character, even though it hasn't appeared. I don't wait for the appearance before I take my trade. But for we are just starting, it might be good. We wait for change of character, but if we are so sure that we know what we are doing, why not? Without seeing change of character, you can go ahead and pick your trade. So now, this was the last lower high, and this was the last lower low. Now, the price shot up past the last lower high, and formed a new higher high, and then came down to retest the last lower high and couldn't break it down. Okay, and then from there we saw that although it later came down a little bit, the structure hasn't still spoiled. Okay, because we now have a buy order block right here, and then we saw the market going all the way up. Okay, we are still going to come into this in-depthly very soon. I'm just touching it briefly. So what happened here is what I'm just trying to explain. Okay, I explained it using trend line. I've also explained it using what smart money concept. Trend line, I said the trend, the last swing low, the last swing high we had was what? Was right here. I'm using trend line again, okay, so that we can understand. The last swing high we had was right here, okay? Instead of the market to do another swing high right here, the market didn't do it. Rather, it stopped respecting the trend line and it went up, okay? And from there, we can confirm that what we are done with the downtrend. And that's number one way to analyze this market. And number two way to analyze this market is what? Using the smart money concept, which is what? The change of character. We can see right here that after the last lower high, which is right here, the last lower high, which is over here, okay? Over here, right? The market formed the last lower low and then broke the last lower high, because the market was not supposed to, if Adibim were not done with the downtrend, the market was not supposed to come and break this lower high, okay? But the market broke it and then retested it and then went all the way up. So that's for what smart money concept. I believe we understand this, although I've went a little bit ahead of myself, but I believe we capped what I've explained. So now back to what I was explaining. So for trend line, we just need to observe the beginning of the trend. Now, for we using smart money concept now, you can take it from if you look at this other block now, you will see that that's the second order block after the one that is down here. So you can either take it from here or you take it from here. Okay. Now, if you look at it, you see that the market respected it all the way to this place. Okay. Although sometimes the swing lows doesn't touch the trend line, it's fine. But even though it didn't touch the trend line, you can still see that after the swing low, you can still see that the market still shot past the previous what's it called now? The previous high. Okay, see, this was an higher high. The market, let me use this. This was an higher high. Okay, the market tried to come test the what's it called now? The trend line, although it didn't get there, but we can still confirm that this is what a swing low. Because if you look at this market right here, it's a choppy market, and it's what it is simply doing is what it is consolidating. Okay, this is what a volatility compression before the next take up. Okay, because if you look at the next candle after this volatility compression, after this choppy market, you see that it is a strong bullish candle. Can you see that? So now, after this swing low, we can see that the market came here, and this is higher than where we're coming from. Look at where we're coming from. Can you see that this is higher than where we're coming from? So you can regard this, although it didn't touch the trend line, you can regard it as what? As a swing low. Also, it didn't touch right here. Coming. Also, it didn't touch right here, the trend line, but we can still see that it is what? A little bit of retracement, okay? And after it was done, we could see that it also came up. Before this one then touched the trend line, and then we moved up. So that's it for that. I believe we all understand. If we all understand, give a thumbs up before I move on. And if you have a question, please go ahead and ask your question. Okay, thank you. Is there any question? Is there any question? Okay, I believe we all understand it. Okay, let's move on. So I believe that's enough. What's it called now? Enough live trade what's it called now? Live trade example. Okay, so that's for trend line. I believe we've overflogged trend line already, and we all understand it. So the last part of the definition is just what I'll cover now, and then we call it a day. So it says trend line acting as a dynamic support or resistance. I already mentioned this. Okay, already told us that when it is an uptrend, it is a support, and when it is a downtrend, it is a resistance. Just like as we can see right here, that each time there was a swing high, the trend line right here, the trend line resisted the price. Look at each time there was a swing high, the trend line prevented the price from going further up. Okay, look at that. After it tested this place, it came down again, even much more than the previous place where it was coming from. And then it tested again and then still came down. Then before eventually finally it broke out. Okay, and when it broke out, we know that this resistance was now destroyed already. Okay, the wall that was preventing the price from shooting up has now been destroyed. I believe we understand that. So it acts as what? A dynamic support or resistance. And what it does is that it helps traders visualize the dominant market direction. Okay, it helps us to visualize the dominant market direction. Just like we could say that this was a downtrend right here. This was a downtrend right here. Okay, and we could say that once the market broke out from here, it became an uptrend. Okay, it became an uptrend from this region right here. Okay, from this region right here. Okay, so we're able to visualize it. So it helps us visualize the dominant market direction, anticipates price bounces. Okay, we anticipate price bounces and spot potential trend reversal or breakout. Okay, so just like we did here, we spotted the breakout. We spotted the breakout right here. Okay, just right here, we spotted the breakout. Okay, now that's it for trend line. That's it for trend line. Also, one thing that I forgot to mention is we are in a downtrend now. We drew a trend line already. Now, at what point do we come into this market? Mr. Shaye, this is a downtrend. At what point where is the best entry for us? This market being a downtrend, what is the best entry for us if we are to take trades?
Yes, thank you so much. The best way for us to get the best of the profit is when it retraces. That is when the candle goes back to the trend line and it's about coming, because it's a down line.
Absolutely. Thank you, Mr. Shea. That's it. So when we had our first swing low here, it was the best time, and it respected the trend line. It was the best time to first of all buy. Okay, and then when it was done with everything it was doing, we can see liquidity grab here. Liquidity grab happening here. Okay, when it was done with it, it did what? It went back to the trend line again to try to break the trend line, but it couldn't break. And then we confirmed that it's still going to come down. Then we would have entered from here again, and then would have taken another beautiful profit. And then we could see here, right here, after the swing high again, that it's not ready to break the trend line, and then we could have taken another one. Okay, you see that, and then before eventually it broke. Okay, Okay, there are some important things we need to take to mind when taking signal. Though I'm just using this one as a general example. I'm not saying we should take our signals this way. One thing I always do, and which I encourage us to do also, when we are taking a sell signal, let's make sure that it is between the premium, okay, to the equilibrium. Once it crosses the equilibrium, just step out. No matter how short the signal is, just step out, so that you don't to avoid stories that touches the art. When you are buying down, start from premium and stop at equilibrium. Don't come and start buying down at discount level. Imagine buying down from here, thinking the price is still going to form a swing high, and then you bought down from here, trying to take 8%, and the market now starts going against. Look at where the market came, all the way from here, where you bought in, all the way from here, and then the market did this. Although I know because of our parameters that we use, we would be able to absorb this, but I just think this doesn't speak well of us as a good trade analyst. Okay, it doesn't speak well at all. So when you're buying down, make sure you start from premium and then you stop whatever you're doing when you're buying down at equilibrium. And if you're buying up, don't come and buy up at the peak. Don't be like Mr. Newton, buying up from here. You want to buy up. No. When you already know that when the market hits premium, it is sure to come down. Don't come and buy up from this region. No. When you want to buy up, you buy up from the bottom. Okay. Where's my 2? You buy up from where? From the bottom. So that even if the market wants to do a little bit of correction, you just know you are still on the what? On the right side. And then before you know, it will come to your side. Okay. So when you are buying up, start from the discount level, and everything you are doing, let it stop what? As long as manual trading is concerned. Okay. As long as this doesn't affect what's it called? The bots trading. Okay. As long as you're picking trade yourself, you're executing it yourself, it is manual trading. And as long as you're still doing that, make sure when you're buying up, you are entering at the discount level, and you are stopping everything at the equilibrium level. Don't take it to the premium, because it might not get to the premium before it will reverse. Okay, so I'll leave it there for today. I believe we've all learned 1 or 2 things from trend lines, and we've seen wonderful examples as regard the trend lines. So let's leave it here for today. Next class will continue from psychological zones or levels. Psychological zones or levels. Now, anybody has any question before we call it a day? Mr. Moses, you're laughing. Tell us about your laughter, sir.
No, I wanted to clap my hands, but I clicked on the...
Okay. Awesome.
Yeah, sorry for that.
Awesome. Do you have any question? Mr. Moses, Mr. Sheye, Madam Mudupe, do you have any question?
No, sir. Nope.
Okay.
Nope.
It means we understand everything, right?
Yes. We'll still go back to the recording to understand. When you repeat, you watch repeatedly, it will stick very well.
Absolutely. That's why in the balance of the education is, they say repetition is the mother of learning. That's true. Okay. Good job. Good. Kudos to us all who waited to the end. I don't know why we don't have much people in the house. Maybe it's because I didn't put call through. I think I will stop putting call through. I said it before we arrived. I'll stop putting call through to us in the group when it's about time. Once I send the meeting schedule, I expect us to set reminders. Okay? Reminders. We are not all teenagers. We are not babies that needs to be flogged or needs to be cajoled before we do the needful thing. This is our business. We should take it serious. Okay? All right. Good to have us all once again. Let's have a good evening.
Thank you so much. Highly appreciated once again.
Thank you so much, sir. God bless you.
You're welcome.
Thank you, Coach Phil.
Welcome, Mrs.